All right. Hey there. Good morning, everybody. It's just a few minutes after 11 a.m. Central Standard Time here on Friday, the 16th of February. Already halfway through the month, guys, 2024. I'm Christopher Inks over here with Texas West Capital, coming at you live from just north of Houston, Texas. Good to have you guys checking in today. I'd like to talk a little bit here real quick about Bitcoin. You know, I do have an alternate account, and I'll give you some reasons why we may actually see it go parabolic, why things may not be going like you think they should due to previous cycles, and how that could potentially leave you behind if it hasn't already, right? So, you know, the goal is to keep you prepared, not to get you over emotional, but just to show you what's going on and what it could potentially mean as we look at this. Other than that, I've got Fibbo here. I'm going to bring him up real quick, and then we'll jump into that. What's going on, Fibbo?
What's up? What's up? So it's actually good afternoon here, on about 20 miles east of Louisville.
Well, I mean, that's what happens when, you know, when you're up there, you know, in Yankee land. I mean, it is what it is, right?
Yeah, little Eastern time zone. Yeah. So good morning and afternoon to all. How's that?
There you go. Right. I know some people watching. It's probably like good middle of the morning.
Yeah,
you know, like 2 a.m. over in
11
Australia
o'clock at night. Yeah.
So anyway, we're talking about this real quick, and then we'll jump in on what Fibbo's looking at as far as his charts go. So you guys ready to do this? The curator looks excited. He says, Fibbo!
Rock and roll. What's up, crypto curator?
Hey guys, listen, we got a few questions here from people about TWC, and I know we've got some members in here. So if you guys want to tell them what you think, you know, I never force you to say anything. So whatever you want to say, I trust that I do a good enough job. But go ahead and let them know. And we'll jump on this, okay, guys? So the first thing here is curator. Thank you, buddy. So I've got this this chart here. I saw this morning, and this is the Heikidashi monthly chart. And what we've noticed is I posted this on Twitter, X, or whatever, and I said, okay, so looking at this, I said, what's the one thing we notice after every bear market low, right? And the one thing I notice is we have one pullback, one red Heikidashi candle on the monthly, and then we finish up. You know, I mean, at least one red, right? We've got one set of red candles is what I'm saying here. Again, right here, pull back, right? What did we already have? The red candles here. So I thought this was well-timed as far as posting there on Twitter, because it just adds more, you know, more flavor, more support for this idea that we may just be ready to kind of rock and roll like really north. When you consider this, just looking at that, right? I mean, this is every time, right? Every time we get the one pullback. Here it is over here previously, right? You get the one set of red pullback, you know, over here, again over here, again over here, and here we are here. And so things really start looking interesting, right? The other thing I had here, let me see here. This was another one here. This is from Timothy Peterson at N Squared Crypto, if you guys want to follow. Says, yesterday, Bitcoin hit almost exactly a 100% gain in 180 days. That's happened 41 times. Sounds like a lot, right? Since 2015. Bitcoin went higher 78% of the time that happened. The average return for the next 180 days was also 100% as of today. And like I said, I believe this was yesterday. Yeah, February 15th. And based on historical data, there's a 50% chance that Bitcoin will hit 100,000 by August, right? And of course, here is the chart, if it pulls it up here. And so, you know, again, nothing is guaranteed, right? Nothing is guaranteed, but this really starts looking interesting. So I was talking with Gary Cardone the other day, I think it was yesterday, and I'd given him some thoughts on this idea of the overall movement of Bitcoin, potentially, right? And I'd shown this chart. I'm going to share this chart here with you guys real quick. Let me find it here real quick. I got to stop that other one. Open this one. And this includes the secondary, the alternate count, guys. Remember, I've had two counts, right? This one's going to give us the alternate count. So let's put this up here. Let me see here. So we've got the, well, let me change it to this way here so you guys can see the chart a little bit better here, right? So what's going on here? Well, remember my count right now is this idea that we've got a 1-2 and then a 1-2, right? But I've been talking for a while about the possibility that maybe we could sneak a 1-2 overall here. And that would give us, remember, I've mentioned this minimum expected wave 3 target up here around 76, 77, 78,000, right? Now, here's the thing. I drew in this line here. This is, because it is what it is. I'm not saying it has to be parabolic. I'm not saying it has to follow this, but I'm saying right now, since the bear market low over here in November of 2022, it's continued to rally up like this, right? Look at how well it's held. Here's the other thing. You see this ascending channel right here off the lows? There's this one that we've had for, over a year now. Well, here's the thing. In Elliott wave 3 breaks, usually breaks out of the channel. And when it does, it breaks out impulsively because it's wave 3, right? Wave 3, big movement. So if we look at the height of the channel here, and we use that as a pattern target based on the breakout, that's going to get us, let's see right here, just, a little bit above where that minimum expected wave 3 target is. Now, that's a minimum expected target, okay? Wave 3, we always look for it to go at least 1.618 times the height of wave 1. Okay, this is a log chart, so I use the log-based fib extensions because I'm doing Elliott wave. Okay, so and it took me a few years when TradingView came out with it to test it and keep testing to make sure it was coming, but it came out so great. So I don't use regular fibs on log anymore. I always use these fib-based log extension, log-based fib extensions. There we go. I can't even say the words right. So anyway. So, I mean, we look at this and we go, okay, right? We potentially get a 3 here minimally. It could go up higher. We could get a secondary target because what you do with Elliott wave is you go here and you mark this out, right? So I'm just going to draw this real quick here. And this can be black on this. Let me change the color here real quick so you can see this. We'll do yellow. All right. So 1618, right? Now, if we break on through that, usually we're looking to 200%, which is right here around 100,000. And then the 2618, the 3618, the 4618. Okay, this is what we look at, in Elliott wave. So if we're going to get a big pop up through here, initially we'd be looking at this 77, 78,000 area. But if it keeps on running through it, we're going to look up here around 100,000. And if it kept on going up through there impulsively, we might be looking at 154,000 for the 2618. Okay. So
yeah,
we look at this.
I'll take an extended third wave any day.
Right? Yeah, I know. Me too, man. But listen, guys, here's the thing. So we look at these different things that generally, we expect, like I'm looking at Elliott here, the breakout of the channel, wave 3 target. We look at how that coincides right now with the 2 different tweets I showed you, right? The monthly, what do you call it? Hike-and-a-she candles, which again, I mean, it doesn't mean it has to do what it's always done, but I'm telling you right now, that's what it's always done. And we've had the red candle pullback, right? So you start looking, okay, maybe this will continue to add to this idea that we could potentially see a bullish, a strong impulsive move here. And then of course the other one about, at 180 days in and then 180 days after that. And then you also have to consider we have ETFs, right? These Bitcoin ETFs, these spot ETFs continue to accelerate. The money coming in is not decreasing, it's increasing. And guys, I got to be honest with you. This is barely anything. Most financial advisors out there are not telling their customers or not allowing their customers to get into the Bitcoin ETFs yet. Now that's going to change, maybe summer, maybe fall. A lot of these financial advisors, they got to go in multi-month kind of looking at it to make sure the ETF isn't a failure and all this kind of stuff. And that takes a while, right? So if we continue to see this ramping up, I mean, all this stuff together says, you know what? There's a very real likelihood that we could see this happening. Now, here's the one other thing, and then we'll jump on with Fibbo here real quick, all right? Here's the other thing here, guys. Here we go.
Actually, I got some charts that'll kind of highlight some of that stuff too, so it'll be good.
Oh, awesome. Yeah, so here we go. So we came in sideways. Remember, if we're just trading pivots, guys, I tell you this all the time. Those of you that have been following me, you've seen this over and over and over again, right? You come in sideways between the pivot and the R1. This is the yearly pivots, right? They show up on the weekly, so I call them the weekly pivots because if you put them on your chart, you go to weekly, you're going to see them, okay? Don't want to confuse you. But these change every year. And so as you can see, sideways between the R1 and the pivot here, right? That it rallies up to the R1, pulls back just slightly here, doesn't ever get to the pivot, and now we've broken out higher. Now with that, we're breaking out of that channel here, which could see this accelerate to the upside. And what happens with your pivots is when you have price doing something like this and it accelerates to the R1 into the R2, most of the time, this thing's going to rally up at least to the R4 or R5, at least. That's 99,300, 117,400. At least, guys, okay? I'm moving through here. As you've seen many times before as well, it can often accelerate right through them, right? But when you get this kind of movement and then you get an acceleration through the R1 into the R2, usually it's going to get you at least there. So if you're going here and go, well, geez, if I buy in, how high are we potentially going? An acceleration through this would tell me at least 99 or 117,000. Based on the height of this, we're looking at this as a wave 4. Based on the height of that, I think you can probably look toward 175,000 at least, because generally look for the 1618 of the height of the swing high to swing low of wave 4. So, again, guys, I'm not here, I'm never here to get you guys, overly emotional or anything. I'm never here to get you, just thinking crazy things or whatever. I'm here to kind of say, listen, this is what we've got set up here. This is what I'm watching. And I'm watching it very realistically, right? I'm not watching it with hopium. I'm like, oh my God, I hope, No, I'm going to make money either way, guys. There's no two ways about it. I'm going to make money either way. But I would be remiss if I didn't say, listen, here are how things are lining up. And, there's this really strong potential. There's this likelihood that we could see that. Again, nothing is guaranteed in trading. The only thing, Fibbo will tell you the same thing. The only thing guaranteed in trading is that you will lose money. I don't care how long you've been doing it. You're going to lose money from time to time. And the newer you are, the more money you're going to lose and the more often you're going to lose it. That is the only guarantee in trading. Other than that, we're kind of playing this game of probabilities along the way and trying to manage our emotions with that. So anyway, I just wanted to kind of put that out there, guys, because I don't want this thing to take off and you go, oh my God, what's going on? No, I want to say, listen, there is real potential in it. There is a real kind of possibility in it, right? And so you guys are here again. I tell you all the time, I take it seriously that you're here, that you're spending this hour, an hour and a half with me every week. And I'm not here to blow, smoke up your rear end. I'm not here to, tell you what you want to hear. I'm just here to tell you what you need to hear and what I'm thinking and why. I'm giving you real reasons based on things that typically happen with price action of why this could happen. But until it actually happens, it may not, right? So it's just something to keep you aware so that you can position yourself properly. And so hopefully you don't miss out on decent movements that happen, within Bitcoin as we continue here. Okay. So, all right, guys. Yeah. Hit the like button. If you're not following, follow along. I'd love to have that. Leave a comment. Again, guys, don't be a dick. I said that last time and somebody comes up totally a dick. I'm like, why? I don't get it. There's no reason to be. I think people get emotionally hurt when you don't tell them what they want to hear a lot of times. But these days I've just gotten to the point where I'm just going to end up blocking you because it's stupid, right? Why waste your time? If your life's that boring and that terrible, you need to figure it out, really. Okay. So anyway, Fibbo, let's jump in here, buddy. What do you have? Let us see what you got going on.
Yeah, since you're looking at the macro look like that, I'll show you what I'm looking at. On my weekly chart here, we had this 61.8% level, the orange fibs here. I was just taking the absolute high at 69,000 all the way down to the low at 15,460. And that 61.8% level is at 48,547. And we went up there and touched it on this candle, and then we came back down and found some buying interest near where the shallow fib was before. And then we went up and touched it again. And then this week we've actually broke through. I think it might have settled just underneath last week. And the reason I'm pointing this out is I like that we're starting to see a movement above that 61.8% level, because we have never seen it before. And I'll show you on a chart here in a second. But the thing that I do, and I will stick to it, is I like to filter possible breaks of support and resistance. And my filtering is 3 periods. So I want to see 3 weekly settlements above that 61.8% level. If that happens, then that support and resistance flip to where that level becomes a support level will raise the probability of what Chris was just talking about, like in spades. Like it'll really start to bring in a lot of different psychology. One, for the people that bought on the break and took profit and then it came back down, they're going to buy. And then everyone else that didn't buy the first time is like, okay, I better get in. And then we get this extra buy of psychology, and then it starts cranking, and then you get FOMO, and the next thing you know, you're at 80,000. So that kind of, well, I just threw that number out, but you know what I mean? Like just the movement
Yeah.
of the upside. So a couple of levels that I have at the moment, my fib extension target, if you were trading this, one comes in around 58.3 if you want to take some profit there. But really the target for this move, after the initial target of the trend line break has already been hit, which was near that 61.8% level, that next level is around 79.7, which comes in pretty closely to what Chris was talking about. And that's based off my threshold hit. But this time around, my threshold is pretty close to where the absolute levels are. So it's kind of coincides together. But that's the thing that I'm looking for, is that filtering, because to me, I want to stick to plan, and I don't want emotions to get in and say, okay, just because we're above it doesn't mean I'm going to back the truck up and just buy.
Yeah.
I'm actually going to filter that out. Now I have my 4-hour of my daily that I could trade along the way and make money along the way if it ends up going parabolic, or if it drops back, then I have plans to do on corrections too. But I wanted to show you that because when you look at this chart here, the one thing I was looking at was the 61.8% level held every time prior to the halving. So back here you had the 61.8% level at 777, never really broke above it, and then this one was at 13,380, never broke above it before the halving. But this time is different. We're actually starting to trade above it. And like you said, we never had ETFs then. We never had. There's a lot going on within the space that could bring a lot more buying interest to the market that wasn't there those prior 2 times. So that right there is that first signal of, okay, maybe we're in a different realm, or a different way of price action. So I do like that we're getting above that 61.8% level. But even though we're doing that and it's never done it before, I'm still going to filter it and be conservative on that break. That's just the way I approach things, because I just approach things a little bit more non-emotional. I mean, basically, I don't know how else to say it, but once it comes to fruition, then I'll go in and make buys and those kind of things. But then if this does happen, some of the targets that I have, my main target to the upside, if this actually flips to a support, as we move into the halving and then further on into the year, it could get up to 114,778, which kind of falls in that range that Chris was kind of looking at on his extended third wave, which could get us up in that area. So I do like those numbers. I'm just not jumping out and just buying all yet. So like when you look at this next chart, another thing that I'm seeing is, I was just following this modified shift pattern here, to where it did wick up and come back down on this red candle, and held this as resistance, this midpoint. But then it closed last week above it, and then we'll have a second close likely this week. So if we get 3 closes above that, then I'm looking at I'm just eyeballing this. This is nothing, no earth shattering anything. But what I did was I just took the low to high here and looked at that rate of change, and then we had this period of consolidation.
Yeah.
And then if I pull this over and do the same thing on this one, it popped up to that range, and then we came back down and hit the shallow fib, and then started working our way back up. So if we end up getting that break, then you're going to move this to this area right here, and that brings us up to about 72K, which is pretty close to what Chris was looking at based on the way he looks at it on the wave counts. So I like the confluence there.
Yeah.
I'm just a little more conservative, and I'm just waiting another week or so to see if that filters out. Then if you go to this chart, and the reason that I want to filter it out, because if we start to sell off and it starts to break down, and there's a lot of people like, oh my gosh, I've made some money, I need to sell it so I don't lose it all, and then all of a sudden you're starting to crank to the downside, that's where this comes into play. Because every trend line break from back here to the halving, so each one of these dotted vertical lines are having here, we break the trend line and we go down, and then it pops back up. But what the main thing I'm looking at is this move here. The 61.8% level at the time of halving was about the same price. So here at the 61.8% level at 7,800, entered it at around the same price. So my only concern is if we go into March and into April prior to the halving, the 61.8% level is at 31.3, which could it correct back to that point, and then start heading back higher and keep that same pattern that we've seen before. That's what I don't know, and nobody really knows. And that's why I filter out the 61.8% level to let me know that really becomes a strong support level. So to me, it's not there yet. I do love the setup. I think it's inching a lot of bullishness in there, but I do want to keep the idea open that it could correct back and could correct back pretty hard, and then we start again. So that's the only thing that I wanted to point out was that the move down to 31.3, not to say that it's going to happen, but to me, until it's filtered, that possibility of a correction back to that point. Now, don't get me wrong. Even if it comes back all the way to the 31.3, it does not break bullish structure. It's just it's a bearish correction in an overall bullish market. So I want to keep that in mind. Even though if that happens, it's not the end of the world. We're not going back to 8,000, and people are like, oh, Bitcoin's dead. It's never, that kind of thing. But a 30% correction could happen. I mean, it happens a lot. So I just want to keep that open to say that possibility to me is still there, at least for the next couple of weeks. And if we can get above, I mean, hopefully what happens is it just rallies up so high and I'd have to do some analysis to see what price level I'd have to get to negate that third week. So like if this week goes up to a certain level and actually settles, I'll have to find out where that level is. But that would say I don't even need the third week. It's already establishing support. But I'll have to figure out where that's at. But without that, I like the three levels there. So going back to some of the earlier time frames on the daily, we went bull. We went bull here. Went out, actually hit the target, hit the fib extension target on that first trade right here. Did not come back down to the shallow fib on this red candle here. But the next thing we do, and this is something I'm going to be looking at, is 3 settles above the 141%, which would be today. If it ends up settling above 50.9, which I hope it does, and it probably should, unless some major selling comes back into the market, I'll end up buying again and going long for the daily with a target of 56.1 as that next sell. So I've already made the profit off of this move right here. So now I'm just kind of waiting to see when to get back in, and that third settle will let me get in there. Now, if we actually get that third settle and we break back down toward the shallow fib, that's where I'll add more, because we'll still be well into the bull zone. So this will kind of capture two things. It'll get me in and give me some exposure in case this thing does rocket to the upside. If I buy it and it starts to correct back down to the shallow fib, then I'll dollar cost average it as long as we're in the bull zone, and we should be. And then that way I'll dollar cost average it and still have that 56.1 target. And then on the 4 hour, 4 hour has been great. We've been trading it in and out. Right now we've We're back long and being up around this target of 53.7. I took some profit in around 52.4, and then once we had, I don't have the other fibs on here because I cleaned up the chart, but once it got up to about 52.4, which is pretty close up to up in this area. Another thing that I'd be looking for is 3 settles above that, which we have not yet had, or a movement all the way back down to the shallow fib, which is at 48.3, which is pretty far down there. So it's another thing that I'm looking at is this move back up. I took profit again. Now I'm just waiting for that 3 settles above that level, which was around 52.4. So, and we're just under that now. But if we get back above 52.4 a couple of times, this target right here probably won't come into play. It'll be the next target. But what I'm saying is we're still bullish on the 4-hour. We're still bullish on the daily. The weekly, of course, is still bullish. So I like the structure. I just want to be a little bit concerned that we could get a little bit of a correction before heading higher. That's that. But I like the charts that you were showing because I like the confluence because I'm just looking at it in a whole different way. But I like that they're coming together. And then also on top of that, the thing that I like to do is just a little bit more of just getting rid of the emotion and filtering that out. The thing that sucks about it, and a lot of people get crazy about it, is the patience. You have to wait, and it's like some people just don't like that, and it's okay. Some people are a little bit more aggressive, and if you want to front run it. You just got to make sure you place your stops and be careful on a possible correction. It's just I'm a little bit more conservative on my approach. So I'm just a little bit more patient, and maybe that's because I'm old and slow now. So I want to be a little bit more conservative when I do things.
Well, let me say this real quick. I just want everybody to be sure that they understand. I'm not saying that what I was saying has to happen. Until that happens, my current view is still my current view. Still the 1-2-1-2 with that minimum expected wave circle 3 up there around 57,000. Secondary wave 3 target there up there around 62,500. So here's my question for everybody else listening in.
Here's my question to you. If you bring back up your Elliott wave chart and your 1-2-1-2 stays, where does that 3 end and you correct back to? Because I'd like to see where that correction would be and if that matches up where I'm thinking.
Okay, so here is my my current count right now. Until that other thing actually happens, this is what I'm watching. And so for y'all that don't understand, when you're using Elliott wave, this is the great thing about Elliott wave is you don't have to know which one of those is going to be the dominant count, which is the primary count, because they're both going in the same direction. And you'll know if it's the other one versus the one you're in, the more aggressive count, because price will continue up higher. And so you can switch out. But
you'll be able to make that decision while it's happening.
Yeah, exactly. And you can continue trading it up along the way.
Yep.
For right now, based on what we've got here, so I've got this as a 3 and a 4 of wave circle 3. And so I've got that 5 up there, right there around that 57,000 area. And if we were to hit that, let me see here. And we were to, that was as far as it was to go. And we were then get, oh my gosh, that yellow. And then we were to get a 4th wave pullback. Let me change that back to black there. Back in black. Okay. 38.2 gets you right here. Initial target would be the 41,500 area, which makes sense. It gets you right back into this multi-week sideways, the ascending channel EQ area. So would make a lot of sense. If we continued up at least to the secondary target up here, around 62.5, just a bit higher, around 43,969 there. And, again, with that right there, still a really good pullback. Let's see, that's the daily. So it's not really going to matter too much because I don't think this, you wouldn't get that pull, the rally up and the pullback by the end of the month, when those, again, these pivots on the daily actually change every month. They're monthly pivots, but I call them daily because when you look at the daily time frame, they're there. So again, just try not to confuse y'all. But yeah, so either pullback kind of right around the EQ of that channel though. So what I'm really looking for here is, do we really get some acceleration? Do we really get accelerating through here? And then we can switch to that other potential count.
Cool. Yeah. The reason I was asking is because I think you can go up to where you have that third wave up there around, what was it, 57? I
Yeah.
think we can go up to that 57 and still come back down and not filter that break. You know what I mean? So we could still get a move up. In that third week, actually, if it settled at 57, it would probably become support. I'd have to find where that level is. But that's why I like to filter it, because we could still have a move up to 57 and I'll make money on my daily, on my 4 hour, because I'm trading
Yeah.
it. And then if it comes back down and gets back below that 61.8% level in that third week, then that opens up that correction. And then I'll buy back a lot lower instead of buying back at the other area. So but I like the setup though. The one
Yeah.
thing I do like that is happening that wasn't happening before is that we're actually trading above and settling above the 61.8% last,
Yeah.
and that's new. That's something we haven't seen
Yeah.
before. So to me, that right there is a red flag that, hey, we could be on the verge of a nice little parabolic run. And I want to be ready, and I'll have my 4 hour and my daily exposure in case this thing rock and rolls. And then next thing you know, we're above the previous all time high,
Yeah.
and who knows what'll happen. Everybody and their brother will probably come out and go, I better get into this before it goes to 200,000. And
You're
then you
right.
get the
At some
FOMO
point.
people in, and then they'll buy it. It'll go up to about 80 or 90, and then it'll drop back down. Then they'll be out, and they didn't sell it, and then they'll be losing money again.
It's the way it
That's
works every
typically,
time,
yeah, that's
right?
the way it works every time. But we'll see. But that's where I'm at on BTC. So
All right. What
hopefully,
else you got there, man?
I got a whole bunch of tabs open.
Light these people up, man. Let them know what's up. What's happening?
Yeah, I'll just go down the list here. That this is just stuff I've been looking at, just this week. Uh, Ethereum, definitely been in the bull zone, been rocking it out. Got in on a buy, hit the target, came back down. I don't know if we got back in there or not, or we had to get back in up here. I think we did. I think we got back down in again, and then actually hit the target. Actually hit the target almost perfectly, and that comes from that comes from just these two highs back here that were within this wick. That was just an area that I was looking to take profit, and then it dipped back out. I don't know if it dipped back far enough, but I did end up buying again after three settles above the 141. Like I said before, and that's what I was kind of waiting on Bitcoin to do the same. And so I'm back long. Basically, right at this point, it came back down and kind of touched where I was long, um, but it's still kind of hanging out there. We're still in the bull zone. Bulls are still in control of the ADX here. So I still have a movement up to a target of 29.30 is my take profit from where I bought it at. Basically, I'm just roughing the numbers. It's probably about 27.60 or so. And then my target's at 29.30. So that's the way ETH is kind of working on the 4 hour. On the daily, same kind of thing. Got in, hit target, took profit off this move. Have not got back down to the shallow fib yet, but again, 3 daily settlements above the 141, and I'll get back in. So if we settle down here today, I'll get back long, and then my target will be 29.25 on this. So same kind of thing. I like because the reason I do that is because we don't always get a retracement back to the shallow fib if a bull run is really strong. But then again, I do want to take profit along the way too, because I don't want to miss out. So if I get up and it actually hits my target, which it did at the fib extension target, then to me, I'm waiting for a shallow fib dip. And if it doesn't happen, then I look at that support and resistance flip, and the 141 is typically the zone between 127 and 141 is where I would look to see where a reversal could happen. But then it breaks through, and then once we get the 3 settles, which is my filtering,
Yeah.
and that to me is saying, okay, that is now support. Let's go ahead and buy and keep the trend going. So that's the way I approach it, just so I have some exposure uh, if the bull run wants to continue. But in the meantime, I'm still taking profit. What I'd like to happen, take profit, retrace back to the shallow fib, buy it, and then go higher. But that doesn't always work that way. You just got to go with what the market gives you, right?
Right.
Um, Gold. I've been out of gold here. I got stopped out on this move to the downside because I had a little bit of a long, but took a little bit of a loss. as it went into the bear zone. But the been in the bear zone, so I've been waiting. There's two ways to approach this in the bear zone. You could be buying at this fib extension target right here. So you could be long at that, but if you did while it's in the bear zone, you would have been long at this point, and then you would have sold it at the resistance at the shallow fib for that slight little bit of a trade. So as long as this is in the bear zone, I'm not doing anything. I was waiting for a much further down target to mess with it anymore because the momentum wasn't like super strong. So I was just kind of waiting it out, see what would happen. So if you did do it, you would have bought and sold already. And then you're probably waiting for another bull zone to actually buy again. And then once that happens, you have to have three consecutive settles above the shallow fib. So if this went bull right now, you'd still need 2 more settles above it to really give that flip on that 4 hour. And then daily gold is in the bear zone. I'm just waiting for downside target. So I'm out of gold at the moment, just kind of waiting it out. DXY bull zone went up. Didn't I don't know if I have my other target on here or not, but basically it went into the bull zone. I think I got out because I just wanted cash flow. I can't remember the reasons, but the hit the top here, went back down, hit the shallow fib. So if you're playing this, there's the buy right here since it hit the shallow fib with the fib extension target at 105.24, which is inside the this previous zone back here. That's the 127 to 141, which is between 104.92, 105.43. And if you go further back, there's the spot where I would look within the zone to get the target, and that's where that kind of comes from. So you're buying the shallow fib with a little bit of movement up while the bull zone still holds. Not a lot of momentum, so even if it gets up to 105, I don't think it's no bullish gangbusters and it's just going crazy. But there is a small little trade in there if you're willing to play the 4 hour here on the daily or on the DXY. And then on the daily's been bull zone. Went into the bull, hit the target, came back down. Now we're waiting for a shallow fib buy, which hasn't hit yet. And then that target would be 106.50 if the daily comes out and hits the shallow fib while in the bull zone. So DXY is just a little bit of bullishness. So, I mean, if you get into the whole, dollar going up, Bitcoin going down, doesn't always happen, but if this stays in the bull, that just gives you another reason why I want to filter the 61.8% level in case this thing starts to sell off on Bitcoin and dollar starts rallying. Not to say it's going to happen, but that's what you're just kind of keeping eyeballs on it. SPY has been a pretty good moneymaker lately. It's been pretty fun. 4 hour went back into the bull zone here. So you were buying right at this point. Probably had a little bit of a scare right here, but we're back above it. So if you would have been buying at that point, you're back in the money a little bit. And then just the next target is at 50.66. So if you're long, you're just waiting for that little bit of a move. On the daily, the daily is where we've been really making some good money. Getting into the bull zone, we had this target. I really bet a lot on this one. Because I liked the trend line break that we had here, where I make the go to the low to the high, take that same rate of change, which also matched up with my 200% off my previous threshold. So I really like that one. I did sell out all of them at that point, and then what I was looking for was a movement back down to. So when this hit there, I was looking for a shallow fib dip, which we did not get. But we also got. Let me put it back here. But we also got 3 consecutive settles above that target. Like I said before, we don't always get the shallow fib, but if the trend wants to continue, I want to have exposure. So I got back in after 3 settles above it, had a little bit of a scare, but we went back up, and I think I took profit. It wasn't a threshold theory thing. It was just too good to pass up. Because S&P futures could get pretty good pretty quick. Plus, it could also kick your ass pretty quick too, so you got to be careful with that. But that's where we're at there. So if you're following this, you should be long. I took profit, but you should be long with a target of 52.36 as the next target to the upside, or a shallow fib dip, it would be another buy. I don't see that happening at the moment. Bulls are still in control, even though the bears had that red candle the other day, and I think that was probably what the CPI day,
Yeah.
little knee jerk reaction, and then back on trend.
Yep.
But even though we had that knee jerk reaction, nowhere near going into a bear zone. So just kind of continuing trend there. Um, I like stacks as a layer 2. I do trade that. That one's been really good. Got into the bull zone down here. Had to wait for 3 settles. We ended up buying right about this point. We sold. I think we sold. We bought again. We sold. We bought again, and I'm still long with another target at 288. So just been kind of holding this last long. I would have bought more if it dipped all the way down to the shallow fib, and it still can. But we're still well into the bull zone, so just kind of waiting for to add more longs down here or hit the target and take some more profit. So I've just been kind of following that. And this is just along the lines with a lot of alts that are out there at the moment that you're getting a nice bull run. So if you're playing it and playing it smart, you should be doing pretty good. Other ones I'm following is Tesla. One thing I was looking at for was a buyback while in the bear zone. There was this small little divergence here as it touched just at the tip of the 127 level of the area that I would like to buy at 174.74. I did not buy it. My actual target was at my previous low here on my threshold at 167, which still could happen. Even though we've moved up, we're still into the bear zone. The bulls really haven't hit anything. But that 167 is that area that I've been waiting to get back in long. But if you're a little bit more aggressive, you probably would have bought this divergence because the RSI was coming back up into the bear zone from being extremely oversold. So that right there with that divergence would probably give you a little bit of a buy signal touching that point. But if I would have done that, I probably would have been selling out pretty close to the shallow fib as this gap fills. That I probably would have sold that, and it probably would have stayed in the bear zone. I'd have to check that out, but I'm still holding and not holding, but waiting for that target of 167 while we're in that bear zone. So I'm still on a hold for that.
So let me ask you this: so if it continues up from here, it doesn't actually get down to that target, where are you looking to potentially buy in?
Once a new bull zone hits.
Okay, so just when it gets, whenever that happens with the price.
Yeah, and I don't have the like on some of my other things. I have I'd have to pull it up. I don't see it anywhere. I thought I was on one of these. Maybe not. Oh yeah, like on Ethereum here, I'll have a little thing here that shows what the price needs to get whatever threshold.
Okay.
I don't have it on the Tesla chart at the moment, but that's what I would do is kind of see where that level is versus where some of the other levels are to see, because sometimes it could get up to that shallow fib at 209.30, and that's a good sell spot because it would still remain in the bear zone getting up to that point. So to me, I'd actually, you could actually play the short side and work the downside. But once we get into a new bull zone and get 3 settles above 209.30, then I'm back long. And then that to me is a comfort level to know that the trend is switched back. And then that 209 would probably become way high once we flip that back to where we were. Because if you kind of zoom it out, you got this move to the upside, a little bit of a correction back down to this point, and then we went back into the bull zone, and then we went into the bear zone here, and that's why I've been kind of holding. But a couple of things was I like this level here, and if it ends up breaking even further, then the target down here at 123 is within this zone. So there's a lot going on here, but I just want to be more comfortable knowing when these like major trend changes, like if you just throw in some trend lines here, I'll just throw them in, but that and then going this direction, like this. So to me, the first thing would be to get back above into a bull zone and get 3 settles, and then if it ends up breaking this trend line, then that's where I'll start measuring where that could go to, and most likely the target would probably be about 350 or so. So I'd rather buy at 3 settles above 209. Maybe it goes to 230 or whatever. I'd rather buy at 230 with a lot more comfort, knowing that it could go to 350 with a new trend
Yeah.
versus just trying to buy it now thinking, oh, maybe it's hopium, and I put too much emphasis on that divergence
Yeah.
and those kind of things. I don't want to front run anything and be emotional about it. So I want to get the checklist and say, okay, this happened, this happened, this happened. Now we can go ahead and get in, and I'll be a little bit more comfortable on the trend change. Uh, Another one, MicroStrategy, went bull and actually hit the target. Actually came back down, just rebought at the shallow fib at 700 even. It was where my order was. So we're just slightly in the money there, but not that it can't come back down to the 61.8% level, but we'll still be in the bull zone. Bulls are still well in control. So the buy at 700, the next target's the fib extension at 986. So that's the level that I'll be watching for a MicroStrategy move to the upside. Hopefully it goes up to there, comes back down to a new shallow fib, and then goes up to the next target at 1420. That'd be nice. Coin is another one I've been messing with.
Oh man, fantastic earnings.
Yeah, no kidding.
Wow.
Went into the bull zone, had 3 settles at this point. Your buy would have been right here. Dipped down a little bit, but we're still well in the bull zone, and then it just took off. Actually, the fib extension target, which I don't have the line in here, which is pretty close to where the shallow fib is, would have been your basically you would have bought and sold right there on that trade. It would have not came down. Then you would need 3 settles above the 141, which I have to wait for. So I'm kind of waiting on that. So and there's a gap there. There's a couple gaps actually, but this gap could fill maybe on some profit taking, get me back down to my shallow fib. Maybe I'll get in before that third settle, but we'll have to kind of see. But the way the earnings came out, who knows? This thing could just rocket on out of here. Who knows?
It just absolutely. I think they had like a 0.01, like a 1 cent EPS estimate, and then it came out like $1 or something. I mean, it was just absolutely.
Yeah. What's a 10,000%? Difference.
Man. Oh man.
Then I got Mara. Marathon's another one. Broke the trend line here, so I do like this target range up here, up around 45 or so. So we went into the bull zone right here. We were already well above. So once it went into the bull zone, you bought. Well, actually, 1, 2, 3. You would have bought right here. Broke the trend line, came back and retested. I do like the way this structure is right here. Went up and hit the first target at 29.52 from this buy, and then we're working our way back down to the shallow fib to where hopefully we'll get a fill in there, and then the next target would be 35 and change. Nice. Or if we get 3 settles above the 29.52 on the 200%, I'll go ahead and buy, but it'll negate this, and then the next target will be that upside if we end up getting the 3 settles there. So I'm kind of getting hopefully we get a little bit of a buy in here before heading higher on that. And the last one that I've been following and trading is Solana, and it actually just went into the bear zone before the call, but if you move the shallow fib here is at 111.91, which we've had 1 settle and we're on our second. So even though it went into the bear zone and you would have been buying back here on that, well, actually you would have bought and sold already, and then you would have rebought. You would have been rebought right in here. So you're pretty close to a break even. But you want to wait for that third settle to get us to know if this is a true bear or not.
Yeah.
And so it's a kind of a hold and wait. And that to me, that's my stop loss. I know a lot of people are like, oh my gosh, you don't put a stop loss in. Well, historically it works. So I mean, sometimes it'll rip you a new one, but I'm waiting on that second. It'll be a second settle here in a couple hours, and then in another 4 hours from there, if it's still underneath the shallow fib and it doesn't come back up, then I'll get out. Hopefully it stays right where it's kind of at, and then I'll kind of break even. Or if it gets back above the shallow fib, then you just kind of ride it out. Sometimes I'll even rebuy if it kind of comes back up, and I'll just add to the position because there's a good chance it'll get back into a bull zone, that kind of thing. But that's where I'm at on the charts that I'm currently looking at. I think that's all of them. Oh no, I got a couple others.
You got a couple more there.
I got Link. Link hit my target. Bullish hit the target. Now I'm waiting for a shallow fib move. It went into the bear zone, but then again, you still, even though it goes into the bear zone, it's not anywhere near the shallow fib. So to me, going into the bear zone here, and I'll have to update the chart, but I would actually, on a dip down here, I would actually buy the shallow fib um, on this move to the downside, and then stop it out with 3 settles underneath. I know that gets kind of confusing, but the good thing is we've already taken profit because the target hit my 200% off my threshold. So it went up, hit almost nicely, and then starting to work our way back down. So I've been waiting to get back at the shallow fib. Even though it went into the bear zone, we'll still look at that shallow fib as a buy target, which is at 1857. And then if that happens and we buy, and then hopefully it gets back into another bull zone and we'll buy again. The buy down here, the first target would be 2650, and then if you end up buying on a new bull zone, then you got another target up at 36. So it can get kind of crazy if that starts happening, but you never know. And then the last one that you asked about, Chris, was the Russell
Small caps.
Bull zone hit the target, went a little bit above the target, had 3 settles above it, which was a buy, and then it came back down, and you would actually be buying it again at the shallow fib. So you'd actually be dollar cost averaging right here, and we're staying in the bull zone. So if you did this, you're probably, in the midpoint, probably right around, 1996, with the next target at 2239. So everything's looking good here. I do like that we did get a little bit of a move back up from having those 3 settles. This little break here, even though it wicked back down and didn't go back into the bear zone, I do like the break here with the move to the upside. So it's working nice. You bought, sold, bought again, got an average, and you're in the money again. Let's go, rock it up, rock and roll. But that's what I have for all my charts. So real quick, going through them all. So, any questions, comments, concerns? Open them up. What's up?
I know you've got to go here in just a few minutes. So let me pull up my small caps chart here and maybe make you feel even better. Let me see here. There we go. So this is the same one I've been talking about for a while. We had this large accumulation range going on here. We got the move out. It looks like it, right? And so for me, I've still got this target up here at around 27.90. And so, at least that. And, and so that would potentially then complete, looks like 1, 2, 3, 4, that'll give us 5. We'll pull back down to the, this weekly pivot down here around 1928.50 in that area. And then, man, oh man, we get the big breakout. And so, nothing's changed on this. We've been watching this one since we had the little spring down here. Been long looking for that. And it just continues to work out. Well, this was a great return right here. This pullback into the, descending channel resistance and the weekly pivot there. And you see that nice pin bar candle. We'll zoom in a little bit here. Nice pin bar candle here on this support, and then up into resistance, put down into the support. And then here we go, breaking up into resistance again. And we'll just kind of look up there. The other thing we can kind of look at, let me see here. I think you had Saul. Got Saul here real quick.
I wanted to see what my target was on that Russell when it comes to the weekly, but keep going. I'm going to look it up.
Oh, okay. Yeah. So Saul right here, same chart, guys. Same thing I've been talking about since I said it was a good buy down here. At 9 and some change. We had this great, nice, long accumulation period here. We did really well. Broke out, and we've just kind of continued going with some, reaccumulation here, rallied up. We got this reaccumulation here. We're breaking out again. I've got minimum wave 553 up here at $170. So, and that of course is just based on the height here of this wave 4. Again, as I showed earlier, how we do that. So that gives us that 1618 up there. So, it doesn't have to hit that, but usually that's where we expect it to go or higher. So I've got 170 on there for that. Real quick here, BNB, guys. I've been talking about this one since everybody was very, very bearish, talking about how it was going to crash and die here. And I said, wouldn't it be a shame We broke out, and we did. And so here we go.
Should we
Continuing to break
wave
out.
the pennant? Wave the pennant?
Do what?
Wave the
Yeah,
pennant
yeah.
around, the pennant flag?
Exactly, exactly. We got the rally, we got the pullback to this weekly pivot support. Nice little doji there, rallying right up into the R1 pivot. I think at this point, I think worst case scenario is we get a rejection maybe somewhere in this area and it pulls back down to the pivot again, and then it's off. Then it's like, a 1, 2, 3 kind of movement on that afterward. So I think
the previous high in the R5, boom. That looks good. I like it.
It looks sharp. And again, this is yearly pivots again on the weekly. So I call it weekly, so it's not confusing. Hopefully, it's not confusing.
Yeah,
but yeah, I mean it's a nice break, and then we'd be looking for the further move out. I mean,
yeah, I think you go higher than that, but I still like that previous high looks really nice as a test.
It does. It looks really good. I like the volume profile through the range here. It looks to me like this is just accumulation here, quite potentially. And so to me, that means we should break out, ultimately head to new all-time highs. And that shouldn't be surprising. I mean, everybody, is emotional about BNB because of, news and stuff like that and CZ and everything that happened. But, at the end of the day, I don't trade news and stuff like that. I trade what the charts look like, volume and price action. And I think it looks pretty doggone good for it there. So I just want to kind of bring those up. Did I have link here? Thought I had link. Oh yeah, I do. I do have link. Pull this one up as well. Link's the other one that we've been talking about for quite a while. Since, I was talking about this being accumulation, we were coming down. I said we'd probably get that $4.50, $5 area on a spring would be a good buy. And here we are now. We've rallied so far up to around $20 off that. So it's been almost a 4x return off that so far. And then recently, I spoke about this aggressive rally through the R1 and R2 pivots. This move here suggests that we're going to push through to the R5. And that's pretty similar to what I was talking about on Bitcoin at the beginning, where I said on the weekly there, I said we've got this great sideways move between the pivot and the R1. We've rallied back up to the R1. And so if we aggressively move through that toward the R2, likelihood is we're going to hit that R5 at least on that. And so, again, same situation. It looks like here. This is reaccumulation, large accumulation area here. No pullback and retest.
Just out of kicks and giggles, what's the absolute high to the absolute low Fibonacci level? The 61.8%. I'm just curious. Let
me see here from up here to down there.
Yeah, all the way down to the low.
Let me see here.
I'm just curious. I don't have that chart in front of me, so it's just
no. I've got. I've got on mine.
Oh, you got the log scale, don't you?
But I could switch them here real quick. What's going on with this? Come on. Hey, why am I not getting anything showing up on there? I'm gonna have to reload this real quick here. I know you got to go in just a second here. Let me reload this.
No worries. I got a couple minutes.
Let's see here. Come on. Always seems to take a minute.
Yeah.
All right. Oh, there they are. See, now they're showing up. I gotta love TradingView. All right, let's have it catch up with me now. All right, so yeah, I didn't even have the full chart on. Let's kind of get this all set up here. There we go. And come on. It's so slow. All right. So from the swing high to swing low, what was it that you were wanting to know?
Yeah, I was just curious.
What were you wanting to know? Where was the 61.8?
Yeah.
Okay. If I just pull this real quick here, 61.8 gets
okay. That's what I wanted to see.
$34.50.
Okay. Cool.
Yeah.
Because I wanted to see where that was based on those levels that you were talking about. The R5. I want to see if the R5 hit there or not, but there's still even more room to the upside with that. So, which is a good thing, because if it wants to go all the way to, actually, it's It actually is probably pretty close to your R3, maybe.
R3
Yeah,
is right around 33.
I'm just analyzing in my head. Don't worry about me.
Yeah. But this was a great pullback here. You know, previous resistance as
Oh, absolutely.
support, and you have this long accumulation area.
Yeah.
It's so beautiful. I mean,
That's
it's
a
such a great.
long
And on the
accumulation
pullback,
time,
you see
too.
we pull back to the weekly pivot. What was that?
That's a long accumulation period.
Oh yeah, yeah. They should, you know, the longer the accumulation is, the further you're going to go. But I
Yep.
like the pullback to the pivot and then the breakout higher. We're at the R1 pivot right now on the weekly, so
Yep.
I like it. I like the way it looks. I like the way that things are on that.
Yep.
And
Cool.
man, oh man. So you got to go. I know
Awesome.
that. I need to get out of here.
All right.
As always, guys, remember the only thing you control is how much you lose. That's it. So proper risk management in whatever form it may take for you is of the utmost importance. You're not going to make it anywhere for any length of time as a trader if you're not managing your risk. So I'm a big proponent of looking at, for me personally, of looking at return versus risk rather than total dollar return. And because that, you know, that tells you, if you're getting a 3 times return on your risk or a 5 times return on your risk, that to me tells me a whole lot more for consistency over time. With the way that I trade. So
yeah, I
there
measure
you go.
mine. I measure mine based on. I want to know my percent gains on my wins versus my percent losses on my losses. So as
There you
long as I'm, 3-1 or 4-1, that's the way I kind of measure things. But you can measure in different ways, but that's the way I kind of look at it. But that's the way I made my system, because you wanna ride the trends, right, and
Yeah.
reduce your losses. So if you take 1% losses, but you get double digit percent gains, that's that. If you can continue to do that, then that's just the way I measure it. But
No, yeah.
no right
Definitely.
or wrong. Just everybody looks at different things in different ways,
All right,
which makes
guys.
it fun.
I appreciate you being here, Fibbo, as
Yep, you bet.
always. We look forward to seeing you in another 2 weeks, as long as obviously work permits.
Yep.
For those who are not idiots like the one earlier who we had to ban because he was just awfully rude. Fibbo's full-time job is being a senior trader at his company, guys. So he does what he does as well with us at TWC. But yeah, he's not just some guy who I don't know, is a janitor or something, which there's nothing wrong with that.
This is what
Trading
I do.
is a skill set, guys. It's like saying
What I
somebody
do.
can't be a great musician, just because they're an accountant as well, right? I don't know. It's stupid stuff. But anyway,
Yep,
we
what I
appreciate you
do.
guys showing up as always. You guys take care. The only other thing I can say is, listen, don't just jump into a trade because there's a chance. Look for, something that has a higher confidence setup. Look for something that has multiple areas of confluence coming together. It'll keep you out of a lot of stupid trades that we take emotionally because we're human beings. And it'll make sure that when you do win, you're more likely to win, and you're more likely to win bigger. All right.
Yep.
So that'll be it. You guys have an amazing weekend. If you'd like to join us, you can do so at members.texaswestcapital.com. The link is below. You can join our coaching program there. You can join Fibbo's threshold theory there. And then the other things we do. You guys have a great weekend. Y'all trade safe. Really appreciate y'all showing up. Take care. All right.
All right. Thanks.